Imagine being able to sell your Bitcoin right at the top of a bull market and then buy it back after a drop of 50%, 60%, or even 70%. Sounds like a brilliant strategy, right? But is it really that simple? Or could this be the biggest financial mistake you'll ever make? I hear this a lot. Just recently, a viewer wrote to me, "This time, I'll sell at the top and buy back during the next bear market, just once, to grow my stack. After that, I'll switch to dollar cost averaging and hold long term." Honestly, I get the idea. If you look at Bitcoin's historical price action, you'll notice a pattern. Price goes up, gives drops, gives rises, higher, gives drops again, but not as low as before. In hindsight, it seems so obvious. Sell high, buy low. Example, in 2021, Bitcoin peaked at $69,000, then dropped to around $15,000 to $16,000. Back in 2017, we saw similar crashes to 70%, 80% or more. So why not just buy low, sell high, and repeat? If you had bought at $5,000, sold at $60,000, and bought again at $16,000, you'd have multiplied your money many times over. But here's the thing. That's the theory. In reality, timing the top and bottom is nearly impossible. I don't know about you, but I don't have a crystal ball. Maybe we've already hit the top, or maybe we're just at the beginning of a multi-year bull run. Either way, trying to time the market is a dangerous game, and it often ends with you holding less Bitcoin than before. The market has changed today. We're dealing with two major types of market players. 1. Long-term institutions, pension funds, large corporations, buying Bitcoin as a strategic asset, often with the intention to hold for decades. 2. High-frequency traders, mostly hedge funds, using automated bots to exploit micro-movements in milliseconds. And then there's you, trying to beat the market with emotion-driven decisions. Do you really think you can outsmart emotionless bots that run 24/7? It's the psychological trap people always say. I'll just do it once. But once it works, you'll want to do it again, and again, and again. Just like gambling, one win is never enough. Eventually, you lose. Let's say it works the first time. You double your Bitcoin. The next time, you missed the Now you're sitting on less BTC than before, despite knowing better. What if you're wrong? What if you think it's the top, but it's not? What if you expect a 70% crash, but it only dips 20% and continues upward? What if you sell? Oh, taxes on your gains, and the price never drops low enough to buy back. These scenarios happen all the time, but no one talks about them. My advice, just hold. Personally, I believe the smarter move is to understand Bitcoin deeply, and then simply hold it. Yes, Bitcoin is volatile, but it's also the best performing asset of the last decade, and likely still early in its adoption cycle. Over the last 4 years, Bitcoin's average annual growth rate was 34%, despite all the crashes and FUD. So why are so many people obsessed with beating the market? The hidden cost of trading. Traders love to brag about their wins, but they leave out mistimed trades, tax consequences, high fees, massive stress, and most importantly, less BTC in the end. I know people who turned $10,000 into $100,000 in a few months, only to lose it all in 3 days. Bottom line, if you think you can time the top and the bottom, go ahead and try, but only with a small portion of your portfolio. Because here's the reality. Most people who try to time Bitcoin end up underperforming those who simply buy and hold. Want more Bitcoin? Create more value in your job or business, and invest consistently in BTC. You'll sleep better and probably outperform Wall Street with a fraction of the effort. Final thought. Bitcoin is a number go up technology. The longer you hold, the more likely you are to benefit. Because in the end, it's not about timing the market, it's about time in the market.